I just did a video on Alibaba. And somebody left a comment in another video saying that my video on Alibaba from the past kind of motivated them to either buy the stock or stay in the trade, one or the other. I didn't realize it's done pretty well the past few weeks. I remember it was stuck in like that $70 to $90 range for a while. Let's see. After the peak at the end of 2020, the post-COVID surge, because COVID brought pretty much the entire market down like 30%, but for like 2 weeks. And then everything just blew up. Like Zoom went like through the roof. Lots of stocks, Peloton. I mean, those are crappy stocks, but good companies went up too. But this really came down. This is a good company, Alibaba. Like if you look at like Amazon it's similar, similar company, right? And if you look at Amazon the past 5 years, well, they did come down a lot at the end of 2022, but now they're trading pretty close to their all-time high. They were trading at all-time high in middle of this year. But when you look at Alibaba, it just crashed, but it really never came back. I remember a lot of people were buying it. I wish they made it easy to read these screens. A lot of people were buying it when it was coming down. Remember Charlie Munger was buying like $10 billion at a clip each time of Alibaba, which gave people confidence when, Charlie Munger's investing in the company. But ever since that peak at the end of 2020, let's see if this view is after that peak. I remember it came down real low. Why did I got to give percentages? So annoying. Let's go back to the other screen. Yeah, it fell to almost $60 at the low. I bought it a while ago. I got a good price, like 75 or something. And I sold it. I bought something else. But this surge recently, finally, it got to triple digits. Let's see, it did hit 120 in the beginning of 2023, but then it came right back down to below 100. So it's been trading in for almost 3 years, 2.5 years. It's been trading in this like $90 range, and it really hasn't broken through. So you could look at all these kind of like analysis and you want, but I mean, 3 years, that's a long time to wait for it to finally break through that resistance point. And when it does break through, it's probably going to keep going up. It's a good company. That's why I say that. And let me know in the comments if you have any input on this or have any questions. But when you trade garbage stocks, you can make a lot of money by kind of timing things right, looking for a good price point, but you got to get out before it comes back down, because you could pick up a stock at like $5, say, and then it goes to $8. But then before you know it, it's back down to like below 5, like 4 or 3. So the thing is, when you invest in garbage stocks, it's really about kind of timing. But I don't do that personally. Daniel, what's up? How much higher can it go? It's a good company. It's a great company. It's not just it's a great, great company. So it should go. It should go up. It belongs. It belongs. Obviously, I'm not going to say it's $1 trillion company. I mean, it is $1 trillion company if it was in the United States, or really, if it was in Canada, the UK, Germany, lots of countries, it would be $1 trillion company. But it's in China, so that's why it's a 300. It's like 280 billion currently, right? 281 billion. That's actually a really easy number for me to remember, 281, because that was my address growing up as a kid. On the street, I was number 281. That's why I remember that. But yeah, there's a lot of headwinds with Chinese stocks. No matter how good your company is, you kind of have a ceiling. You can't go up past a certain point because of the risk. When you're in a communist country, there's a risk. That's how they do a valuation with any stock. Well, if they do it correctly, like for instance, let me show you. So if you value a stock, say at like, this is just a really basic way to explain it, but if you value a stock at $1 billion, then there's the country risk premium. And you know who explains this really well is Damadorian, the NYU professor. So if it's a U.S. stock, there's really no country risk premium. There's not much of a risk of the United States government taking over the company and ruining it. Okay. And he actually, I watch his videos, and he has some amazing charts. So I'm just off the top of my head. So country risk premium, like let's just say, like I said, U.S. stock, it's zero. So the valuation is still $1 billion even after you build in the country risk. But let's say it's a moderate risk, like Canada, which is not much of a risk, but there's always some risk. You know, not every government's as like strong as the U.S. government. So maybe like a 2% country risk premium. So now you're down to 980 million from your original 1 billion valuation. But if you're in like Brazil, it may be like, you know, like 35%. So now your original $1 billion valuation is cut down to 650 million. There's some countries that it's too big, the country risk premium. That's why you never like see like Iraqi stocks or certain countries, like you just don't invest in those stocks. It'll just never happen. But yeah, China might have like a 58% country risk premium. So like it really drags down the valuation. So that's generally how you do it. I'm still out on China. I'll take American companies. But I do take into account the country risk premium. That's why my valuation is around, I think, 320 billion. Well, let me see. So I just did the video 10 minutes ago. So, but I know it's undervalued. I got it 22% undervalued. So I'm at 146 a share. So 358 billion. That's my valuation. You know, I have a high WACC. You know, if it was a regular company, it may be 850 billion. But with the high WACC, it kind of. Victor, what's up? thanks for the invite to the stream next week. Yeah, I was it does motivate me when you email me, because I get disgruntled. So when my subs don't go up a lot, like I kind of lose interest, but I got to keep going. You got to push through. And it's so annoying, these comments. I get every day like 15 comments. It's the same thing. It just lists names. It's like Johnson, Smith, Mary, Jones. It's just names. It's so annoying. So yeah, so this is my the end result of my Baba video. So I ranked them 7 out of 10. I got some good feedback on the rankings on the summary tab at the end. I tried something different. I was trying to do short videos, trying to get 1 video a day. So I was doing like between 4 and 6 minutes, but they haven't been getting many views, like maybe 200 views. So maybe I'll go back to my regular like 15-minute videos. So yeah, so my valuation was 22% discount. It's right here. I didn't need to open up. 146. They're actually trading at 115. Yeah, for a long time, it was like $80, $90. It just wouldn't break through the 100 barrier and stay there. They still have a good price to free cash flow, 14 and a half, which is about the median in the industry. I appreciate that. Yeah. Thanks, Victor. They pay a dividend. They're one of the few companies in this industry to pay a dividend. Amazon doesn't pay a dividend. Amazon is the largest, internet retail company in the world. So they used to be, Alibaba used to be, a little behind Amazon in terms of market cap, but now it's not even close. I mean, Alibaba has come back up, but it used to be like $1 trillion for Amazon and 700 billion for Alibaba. But Alibaba just, kind of tanked and just stayed at the low point, where Amazon, it did come down, but it's now trading at all-time highs. 30% discount. Nice. Just where I am. But I mean, look at the revenue. It's still growing. Not a ton though, but it's only up 11% when you compare 2021 to the trailing 12 months. So that could be a little concern, because other giant companies are growing revenue a lot more aggressively. Amazon's now 600 billion, which isn't the biggest in the world. They're still number 2. 600 billion of revenue. When I was in high school, the largest company in the world was around 600 billion market cap. Exxon, I think it was Exxon. Yeah. Now there's companies with revenue of 600 billion. Wow. 47K of Baba. You really have faith in them. I like them a lot. And I sold out of my position. I don't like the risk of the country. It just, like, you have that I know it's going to break through, but you have that it kind of has a ceiling, but there's definitely a lot of upside potential with the stock. And that's why I bought it, and I kind of chickened out and sold it. I like the shorter videos for what it's worth, especially the 1-a-day format. Understand if you need. Daniel, thank you for saying that. It helps to get feedback. I go through these phases like we all do. You have your phases in your with friends or your job or your spouse, where you can't stand them for a while, or you're happy about the situation. But I'm still chugging along. I'm going to hit 5 years in May. 5 years. It's a long time. So Walmart is still the largest company in the world in terms of revenue. It's been that way for a long time. And they're the largest entity in terms of employees. I think it used to be the Chinese government employed the most people. Now it's Walmart. Generally, when you look at a country, the largest entity in that country in terms of revenue and in terms of employing people, it's usually the government. So if you look at any country and you don't want to know what entity supplies the most jobs, it's usually the government. So if you look at Brazil, what entity supplies the most jobs is probably the Brazilian government. Same thing with most countries. The U.S. though we have Walmart that took over our government. Hey Chris, I'm still out on China. I'll take America. How much? Bridgeford Foods. Yeah, Bridgeford Foods. I mean, who's do you guys hold Meta? Are you guys holding Meta? I mean, I was pumping Meta. What the hell? You know, since I started the channel, I hope you guys have, because my portfolio it's just so high, and I'm not trying to brag, but it's mainly for Meta. I hope you guys listened. I can't believe I bought it at IPO. The first day it started trading at $40. Now it's 600, but I bought a lot more after that. So I hope you guys, I mean, it wasn't like a wild guess. It's not like I have this great intellectual mind where I could figure out stocks that nobody knows. It was a massive company, you know, probably IPO'd at 150 billion. But yeah, but it's just been. So yeah, so largest in the world is Walmart. I think Amazon will take them over because I think Amazon's growing at a faster pace than Walmart. And I mean, retail is here to stay. It's crazy when people say, oh, retail's dead. Yeah, there's always going to be businesses that go bankrupt. And retail is a tough industry. It's much tougher than online. Because could you imagine if you wanted to sell something or provide a service of some sort? It's hard to do it in a retail brick and mortar store. It's very expensive. Like say you wanted to sell, say you made candles or whatever, and you did it for yourself, but they were really nice candles. So if you wanted to open up your own store, a brick and mortar store in your own town, it's expensive. So it might set you back, like say, I'm going on the low end, so 50K to get up and running, because you need to pay like last month's rent. You need to get some employees. You need to get inventory, and also you need to maintain the business. So every month you have to pay utility bills, rent, things like that. That's why it's so expensive, brick and mortar. And that's why a lot of retail stores are going out of business. It's just a tough industry, but it's here to stay. It's how kind of like how things were built. It started out that way. You know, that's what people went to stores to buy food and groceries. So I don't think it's going away. But it's cheaper to get, if you sell candles and just make a website for a couple $100. You don't have to pay rent. You know, it's very little to maintain the website in terms of costs. But yeah, so Amazon, it's probably going to be number one soon. But look how profitable it is. It's twice as profitable as Walmart. Then you have the government of, well, this is the Chinese electric entity. That's the third biggest in the world. Then you have Saudi Aramco, the oil and gas conglomerate. They did start trading, but they only trade like a small portion of their business. You don't really own the whole business. It's like I forgot the ratio, but it's like maybe 5% of the business or 2% you own. That's why the market cap is only 20 billion. And then more Chinese companies, because China's sorry. The Swiss company Vital, 400 billion. Yeah, so there's a lot of government entities, but now with the the market's been growing, not just in the U.S. but in a lot of countries. So there's a lot of even non-U.S. countries that are making this list that are gigantic. But it's interesting to see. Okay, so what do you guys think? Is there like a stock? Oh, here's the country breakdown in case. I find this stuff interesting. I don't know if anybody else does. So these are the largest entities in terms of revenue. Like the top, I think 50. It's from Wikipedia. So 23 of the top 50 entities are in the U.S., which I guess makes sense. Look at China, 11. They have 11 entities in the top 50 in terms of revenue generating. So 11 of the top 50 entities in the world are in China. 4 in Germany, 2 in the UK, and some other countries. Yeah, that's a good question. Is China going to remain stable? But they pulled back a lot. They were growing at a rapid pace, but they've kind of plateaued. What's the best way to track the Chinese economy? Is there like an ETF, Chinese stock market index? The Shanghai Composite Index. Okay, that's probably a good I'm not sure which one it is though. Shanghai Composite. I guess this is it, right? Yeah, I think China is going to last. It's going to go. It's going to definitely have ups and downs. Okay, so this is not giving us any information. S&P China 500. Let's see that. S&P China. Okay, this should give us an idea of why it doesn't give any information. Bird? You meant Brid, right? BRID. Bird is the Canadian company, the Canadian construction company, right? Bridgeford Foods. I kind of want to. Okay, Chinese economy. Yeah, no, China, they were struggling a little bit with the, especially in the retail space. Which company was that in China that was on the verge of bankruptcy? Evergrande, yeah. But that's just, some companies or even governments, they just lever up too much, and then they go out of business. They try to grow too quickly. But as a whole, it's just, it seems like there's a lot of potential. This is a good chart. It goes back to 1980. Let's take a look at this. So the GDP in China, it went from 300 billion in 1980. So it looks like it pretty much just only goes up. I thought they had a. I thought in the beginning of the century they were declining. But yeah, but that's the reason it's just it's such a powerhouse is because like there's so many people. Actually, it's second in the world in terms of population. India is number one. So India may be a good potential as well. But there's so many people who are moving from like different classes. Like you have such a large population of people who are poor who want to move into like lower class, where they have like, instead of like, they want a nicer place to live, and there's a lot of lower class people who are moving into the middle class range, and of course middle class to upper class, and it's like that in any country. Like if I started making a lot of money, then I'm gonna probably buy maybe a nice car, nicer home. I'm gonna spend more, especially if you didn't have a home to start with. So there's a massive number of people, like hundreds of millions of people, who are looking to get their first home, or another 100 million people who are looking to go from a pretty rundown home to a little nicer home. And then, so that's why it was growing at leaps and bounds. Just so many people who are moving up that range. So they needed a lot of, like lumber, construction, supplies. And that's how you grow as economy, when people spend. But yeah, but if you look at it went from the growth from 1980 to 2028, it grew 100x, 100 times growth. And I bet you if you look at the GDP for the US, it's not even close. Okay. So US GDP, it's 25 trillion. In 1980, it was 3 trillion. So really, in the same time frame, China grew 100x. The US grew 8x, which is still a pretty big growth, because when you go from 3 trillion to 25 trillion, it's a big growth, right? But they went from 300 billion to 30 billion. So the entire country grew 100 times. It's a lot of people, a lot of like supplies, a lot of demand. And I think there's still a lot of potential, but India may be better, actually, because India is lots of poverty in India. So, but what countries? What's a good investment in India? So this went from 189 billion, 189. Oh, this is forecasted actually, but it's fine. 189 to 5,900. What? So India grew 30x since 1980. Okay, let's look at Bridgeford Foods. I did a video on that. There was 1 week where I try to pick stocks. I try to do a little dig a little deeper into some stocks that I thought were undervalued. Because I wanted to not just pick stocks that were already like 100 billion market cap. So I wanted to pick stocks that were, on a cheaper side, like under like 10 billion market cap. I can't remember the number I used. I was trying to look for really discounted stocks. So that was one of the stocks that I came up with. I came up with like 5 or 6 stocks that I thought had the potential to like 5 or 10x. I did invest in one and I lost like 50% of my money, but that's a different story. But let's look at Bridgeford Foods. Okay, BRID. So it's at 9. Market cap. So I think I think I did under 1 billion market cap when I did this exercise. $82 million. I don't know why I have dividend here, but I guess I put in there. Let's look at the future. Bird. Yeah, the only reason I said that, Daniel, because I remember doing a video on Bird Construction. It was it looked like an interesting company. So when you pick when you pick lesser known stocks, there's probably not any analyst looking at it. So you're not going to get as much info in the future as you would a stock that, everybody looks at. But in the video on Baba today, I also showed, come on. They have 112. Look at Simply Wall Street, 112. But you could look, if you could look at how they come up with the 112. They do a DCF like I do. It's just the inputs are a little different, of course. Look how low they use, a really low discount rate. That's the whack. 5.8% is crazy. I use the same risk-free rate as they do. They use 2.5%. And they show you how they come up with the calculation. Like there's a lot of stuff. They use a levered beta of 0.8, a re-levered beta. So this is what we're looking for. So the future free cash flows, this is an estimate because they don't have analyst estimates. So 8, 12, 18. So they think free cash flow in 2025 is going to be $8 million. And then they say 2026, 13 million, 2027, 18 million. And you can see the growth. Like, I don't think that's going to happen. That's really aggressive. And I don't think they've ever hit those levels before. Zomedica, yeah, I used to do a lot of videos on Zomedica. They were really popular at one point. The online animal vet, right? So you can buy medicine for your dog or cat. I think they also sell medical devices. So here's their revenue historically since 2013. So 129 million. It peaked at 260 million, and now it's down to 230 million. And free cash flow, I think they just use a basic model when they forecast free cash flow. I think they use a basic, like that's a 50% growth the first few years. So I think they use like across like a lot of companies, they use the same model and just use those estimates. But I don't think this company, unless they really start acquiring other companies, but I'm not going to go to 13 million in 2026. I'll do the 8 million, but actually before I do the 8 million, yeah, I could see that 8 million. Okay, I'm in billions, so I should probably fix that. Equals 8 over. See, right here, these numbers are in millions, just so you know. But when I input it, okay. So this was done real fast. So I just want to double check. But so I'm projecting 8 million of free cash flow in 2025, 9 million in 2026, 10 million in 2027. And then I do terminal value based off of that 10 million. I think these are reasonable figures, although I gave them a 12% whack because that's just crazy. Like, am I going too fast? I probably am, but They give a whack of 5.8%. That's like the U.S. government kind of whack. Like who has a risk-free rate of 5.8%? Will it like it's just extreme. Like if let's say I kept that 5.8%, then my valuation is $30. Who could get a loan now at 5.8%? Especially a company like this. Maybe a company like Apple can get a loan for like 5.8. Even it's hard. You know, rates have gone up. I love all those videos, smallish. Yeah, I try to do more small companies, just trying to change it up because there's a lot of companies that nobody does a video on. So I figured if I have the only video, I guess it's a good thing. But if I was, I think a legitimate range for this now, I could see it hitting 15 maybe. Maybe I could lower the whack, but I don't think. I mean, it's just crazy. So this is how they do it. They do a terminal value like I do. So they take the so you know how when I do my DCF, I usually do 4 years. I predict the next 4 years of cash flows, and then I do a terminal value. They do 10 years. So they're predicting 2025 levered free cash flow. Then they discount that at 5.8%. And then they 26 up through 2034. So they project 2034 free cash flow to be 46 million. They discount it. Today's dollars is 26 million. So if you want to get terminal value, it's a 26 million because it's a free cash flow at 2034 plus the growth rate. And the growth rate is 2.5%. Perpetual growth rate, 2.5%. I use the same growth rate. You generally don't want to, you usually use a risk-free rate because you can't have a growth rate, say, of 5-6% in perpetuity. Because if you did that, because inflation is usually usually between 2 and 3%. That's why we use 2.5% with these models. This is why it doesn't make sense when you use a perpetual growth rate above 2.5%. Because I'm just going to use smaller numbers so we can you can visualize it better. Like, what's the US GDP in 2023? 27 trillion. So I'm going to use 27 trillion. Okay, this is why it doesn't make sense. So the terminal value, you're projecting all the cash flows after a certain time frame. So say inflation is 2.5%. That means the U.S. government. The U.S. economy will grow roughly 2.5%. Come on. 25. Okay. So if the U.S. GDP grew at inflation, and say we said it's 2.5%, so next in 2026, so let's say by 2030, if the U.S. GDP grew at an average of 2.5%, the GDP would be 30.5 billion. I'm taking a stock, and I'm going to just assume it's worth $1 billion today. And if I did the growth rate of 5%, it's still 1 because of rounding. It's still rounding to 1. But now the U.S. economy is worth 35 billion. This one company is worth 2 billion. So obviously the U.S. economy, the starting point was so much larger than this company, 27,000 times larger. But if you assume this company, U.S. economy, company X, if you assume this company is growing at a 5% rate each year, still, U.S. economy is much larger than this company, right? 55 billion to 4 billion. But the gap is getting smaller. You can't tell. It's $669 trillion, the U.S. economy. This company is $568 billion. Let's just do 10% because let's assume it grows at a 10% rate, which doesn't sound like a lot, right? Imagine growing your company at 10% a year. It's not that crazy. But this is why you can't use a growth rate beyond 2.5%, because at some point it took to the year 2170 that this company, company X, is now larger than the entire U.S. economy. Because if you have a growth rate higher than inflation, mathematically at some point in the future, that company will be bigger than the entire U.S. economy. So that's why we never use a growth rate beyond inflation. It just doesn't make sense. Was anybody following me? But well, if you have a question on that, let me know, because I have a lot of more things to say on that, but I don't want to like bore you too much. But let's go back to Bridgeford. So I usually don't care about the past, a company's past. Hey Dex. But the reason I like to look at it is because That's just crazy. $112. That's what you get when you don't have like a human doing these models. You just have like inputs. So you could be like a $1 trillion stock because the inputs were screwy. All right, let's see how the stock has performed. Well, it really took a tumble. So in 2019, I wish they made these easier to look at. Yeah, so in 2019, it got to $36. So pre-COVID, it was over $30. That was its peak. It did have a surge in 2021, but it's been coming down. Why did it have such a surge? It did break through 13. This is why I like looking at the past, because if I bought a stock for $9, right, and say my valuation is 12, then in theory it's a buy. But if it never hit 12 in the past, then I'd be a little concerned that it wouldn't hit 12. It'd take for like a long time. Like I'd have to wait like a year, 2, 3, 4 years. But if it hit, and this was real recently, 13 in August, then it's much more likely it can hit that level without me waiting. Because even if this is perfect, my model is perfect and it is worth $12, doesn't mean it's going to hit $12 today or even this year. It could take 5 years. And I don't want to sit on a stock for 5 years to make 30%. But if it hit that target pretty recently, then there's a much higher chance of it getting there again. It's kind of like muscle memory. I don't know if you guys play sports or work out, but if you were able to bench 2 plates, like 225 at one point, say in high school, you're much more likely to get there than if you never did it before, even if you regressed a lot. So why did it go up so much in September and August? Bridgeford. So I did a video in July 2023. So it was $11 when I did it in July 2023, and I was at $25. So yeah, so in July 2023, I did a video right here, and I was at $25, but it kept coming down, and then it looked like it was heading in the right direction. Now it's come back down again. Buyout speculation, that makes sense. So I was really bullish back then. Bridge of Foods shares pass below 200-day moving average. So this was around, it was just in August. Let's see if we can see some new. So in August, okay, here's Bridgeford Foods is in very good shape despite the share price collapse. Third quarter earnings release. That's surprising. I would think they would have some news articles in August, right? Bridgeford Foods. It's hard to find like rodent droppings. The reason I like companies that sell food is just there's always demand and there's always a need for it. I mean, it's hard to like really, get like a 10x growth on a supermarket stock, but you generally get stable growth and hopefully stable dividends. Let's see if they mention anything in the investor section. Nothing in August 2024. So I guess they kind of want to keep it a secret, right? They don't want to tell us why the stock went up so much or down so much. Yeah, long Baba. Yeah, Baba's a great. One of the best investments ever was Masayoshi Son. He runs SoftBank, the large Japanese investment firm. SoftBank. They're a holding company. They're like Berkshire Hathaway. They invest in other companies. But pretty much all his growth was from SoftBank. I mean, from Alibaba. He invested $20 million in Alibaba in 2000. And in 2000, it was they were on the verge of going out of business. They were really struggling. They needed, they needed capital. Sometimes you could have the best product in the world, but if you don't have funding, you go out of business because it could take a while. So like if I sell the best hammer in the world, I don't know. Just because it's the best doesn't mean I'm going to get a ton of sales. It takes a long time for people to realize your product is good. And it could take a year, it could take 5 years. But yeah, he turned that 20 million into 60 billion. $60 billion. So it's arguably one of the best investments ever. So his profit was 59.8 billion. So he 3,000x'd his investment, 299,000% growth on $20 million. because you can take like, it's not easy, but you could take $1,000 and turn into 10,000. I bet you if I gave you like $50,000 and I said just turn 1,000 to 10,000, you could just take that 50,000 and put $1,000 in 50 stocks, right? And if one stock goes 10x, then you just show, oh look, I 10x'd. But to take something 20 million, it's a lot of money, 20 million, right? And to grow it at that rate, it's amazing, right? But he waited over 20 years to get to that point. Chances are, if you invest $20 million, you have to wait 20 years. You probably end up with like $100,000 after 20 years, unless you happen to pick a great stock. Okay, so I think I'm gonna head out now because I want to have lunch by 1 p.m. Getting kind of hungry. Yeah, thanks for joining. Yeah, let me know in the comments. If you like the shorter videos or you want longer videos, it helps me get an idea of where people are at. Okay. So I guess I'll talk to you guys later. Thanks a lot. Okay.